Hello traders, and welcome to another Non-Farm Payrolls live webinar brought to you by Orbex.com. My name is Richard and I will be your host for this session. During this webinar, basically this webinar will be based mostly on technical analysis, more exactly on Elliott Wave analysis, which is actually my specialty. I will be combining multiple technical analysis tools such as structures, patterns, channels, Fibonacci lines, divergences, and others. In order to help you guys out with your trading decision on today's big event, the non-farm payrolls, for those who don't know what non-farm payrolls are, is basically this is an event. Some data will be released in regards to how many people are actually employed in the United States in the government sector, excluding farming industry, all right, and excluding the private sector, obviously, which was released on the ADP non-farm employment change 2 days ago on Wednesday. All right, so today is the 1st of June. We're gonna get this month started. We're gonna kick it off with some technicals right here. So what I'm gonna do is I'm gonna go over some scenarios. I'm on the dollar index, the 2-hour chart right here in front of me. So what I'm gonna do is I'm gonna attempt to help you guys out with some scenarios on today's event. Now, obviously, this is a non-farm payrolls, and the way the market is actually located right now gives me a sense that a big move could actually occur today. Now, before we get started with the analysis and with the scenarios and everything, I'd like to let you know that all my views are to be treated as simple market commentary. This is not an investment advice. My views are mine only. This is not designed to influence you or induce you in any way. So you need to make your own decisions. So basically, yeah, that's what I wanted to say as a verbal disclaimer right here. So now that we have that out of the way, it's basically charting time, right? So um, I'm gonna go on the daily chart just to share with you the bigger picture right here on the dollar index. And the way I'm labeling this structure is with an A, B, all the way down here with a C for the primary A blue, yeah. And right after that, market started correcting. Yeah, the dollar index had this massive rally. So, in other words, I'm labeling it as an A, B, and a 5-wave sequence within this orange C in order to finalize intermediate scale turquoise A, right? So what I would be expecting is basically the following thing. Now, obviously, we have a reaction here at 61.8 of 3 and 4, which is normal for a wave 5 to end, right? Now, what's interesting is that we're actually located, it reacted from 26th of October 2017 high before basically when the market triggered the downtrend, yeah, with a 5-wave sequence for this C wave, all right? For this minor scale red 5 right there. So this is actually the day of, let's say right here, 12th of December, when the Federal Reserve rose basically hiked, right, interest rates, and the market started falling. Yeah, so right after that, basically, let's say for instance on the in the second half of February 2018, the market started making that correction, right? So that's enough for the daily chart. Now what I wanna actually point out is that we have a reaction here on a possible double top, right? And this is actually a fib right here at a resistance as well. Notice the head and shoulders right there, and we surpassed the right shoulder. Where basically what's doing, it's heading for this head formation, right? So let me just jump back on the 2-hour chart. So that 5-wave sequence, what we're going to do is we're only going to focus on this piece, on this last 5th wave, green minute 5. Yeah, so the way I'm labeling it is in an A, B, C 2, A, B, C 3, 4, and then AB, probably a C wave right here. So so far I see this structure as a possible expanding ending diagonal. Okay, now if I were to label it as an ending, contracting ending diagonal, I would have needed this to rise there. Hence the reason why basically I'm not labeling it like that. So one thing that I can say is that this this NFP event, according to the data released, the market will most probably will make a decision. It's located as at a decisive moment, let's say, right at a crossroads, as a market juncture. Because if it breaks right here, yeah, this would mean it would actually break this this trend line, the lower trend line, the lower base of the expanding ending diagonal, possible expanding ending diagonal. So if it breaks, then obviously, let's say for instance, the bearish scenario would be like this. If the data released would be would not be satisfying, right? The dollar would indeed fall, right? So if the dollar actually loses strength, this will mean we would actually witness a bearish breakout, followed by basically a flag right here. Notice this flag right there, which I've marked. So this would be something that bearish traders would be looking for after that fall next week. Let's say, for instance, when the market would be correcting after the move. However, this labeling, I mean, the way I'm labeling things is as for a possible bullish run, right? So in other words, let's say for instance, if the NFP data would be good, right? If the data would be good, then this would rise, right? Basically giving a fifth wave in order to possibly end this this structure, this expanding ending diagonal, possible expanding ending diagonal. So the bullish scenario would send the DXY towards 95.45, 95.50, after which it would of course show a possible bearish divergence, because this would end a larger degree, let's say for instance, right? Thank you for chatting. By the way, thank you for chatting. Basically, in the chat box there, in the questions, I will do my best to answer your questions later on. Okay, so if you do have something to point out, just write in the chat box, and I will get back to it later on. For now, we have about 20 minutes until the data will be released. So I'm going to finish up explaining things to you, basically what I have in mind right here, and then get back with the questions. Thank you. Now, if the market, as I said, if the market would have a bullish run right here on this on the data, on the actual data, right? That will actually, for instance, end this possible expanding ending diagonal at the top with an overshoot, right? So traders would be looking right there for a bearish divergence, right, at this actual top. So we'll see what would happen. Now, what I'm gonna do is explain to you this points of interest, because that's the reason why I said that the market is located at a juncture, at a crossroads, right? Because we have resistance here, we have support, multiple signs of support, we have Fibonacci extensions, we have basically all the entire recipe for a possible reversal or a major decision to actually occur, right? So what I have right here is some points of interest, some levels, right? Let's say for instance, on this bear flag, this would be the trigger point for the sell-off, if that would occur. Of course, I could be right, I could be wrong. If, however, the market goes up, right, it will exceed this point, obviously, probably heading towards the 100%. If an overshoot would occur, then 161.8 would be the next level. However, I'm not really looking at that at this time. I'm mostly looking at, I would be looking at 100%. So we'll see what scenario would occur. Now what I'm going to do is I'm going to do the same thing, basically do some quick analysis on majors, on metals, let's say for instance on gold, silver, a bit of crude oil, let's say energy, and then go to the majors: Euro USD, pound dollar, dollar yen, dollar Swiss, Aussie dollar, and two indices: one European index, which is let's say DAX 30, Germany 30, and the SPX for the US, right? So let me just go on gold right here. The wave count for gold is, let's say, previously on gold. Let's say, let me just go back to this dollar index. According to my previous posts, this bullish rally has been, has been posted by me with an AB and then expecting this this C wave, just like you actually see when I click. When I click this display button, it actually loads the new bars from the time of the post from April 13th, right? So in the meantime, I actually posted on the Orbex blog the analysis for the possible bearish outcome, right? Which was posted on let's say May 28th. So as you can see, we have the reaction here at 94.90. Now, until now, the wave count was updated. Hence the reason why I'm sharing it with you all today, right? So let's go basically on this on gold, right? Now, on that specific view, I posted a bearish opinion on gold, yeah, and you guys can actually see how it reacted right there. And basically this is what actually happened from 1350 heading down towards 1285, right? Now what I'm seeing on gold is this is a bit tricky because this X, right, can be actually here, right, which will mean that this could be an A, B, and then the downtrend would start with the 1, 2, 3, 4, 5 in a channel. And I'm gonna go on it and explain to you exactly what I mean by that, because all right, now if I do this, just draw a channel, right, we can see the reaction right there, and it actually fell. Now if this would be an A, this would be a B, and then we start with a channeling, basically ending diagonal in a channel, right? 1, 2, 3. This would be the 4, and then this A, B, C, right? To be the fifth leg. Obviously, it would of course end this primary B scale. Okay. So we'll actually see if that would occur. However, the current, this is basically as an alternate count for a bearish scenario, which would create a lower low, something lower than 1285, right? Before it would make a sustainable correction, let's say. So for instance, how I'm labeling it right now is as an AB, 1, 2, leading diagonal in 1, sharp correction in 2, then 1 complex structure in 2 in some sort of channel, and possibly gaining support around here. Now, what it would need to do is react at about 100% right there, which is 1 to 90. We'll see if that happens. To be honest with you, I'm a bit bearish, personally speaking, on short term on gold, right? And we'll actually see. Now, moving on to silver, I mean, the data will be released, let's say, for instance, in about 15 minutes. Now, what I will do is, this is the Orbex blog. This is where you will actually find my posts and market analysis. Let's just load the economic calendar in the meantime. So what we're going to do is we're going to, just give me 1 second, I'm reading a question. Okay. Yes, I would point out what time frame. All the charts are intraday on the 2-hour. So you'll only find 2-hour charts. At the end, I will go on higher time frames. So what we're going to do today is we're going to focus on these 4 right here. Okay, these are the focus. the unemployment rate, the non-farm, basically the jobs added or not added. We'll see the results, and the participation rate, so and so, but the average hourly earnings for sure. Because according to this data, what I would be focusing is basically mostly on the average hourly earnings, to be honest with you, and the unemployment rate. Now, according to this, how they're placed right here. The previous, as you can see, the unemployment rate actually decreased, which is good, right? Last month. Now they're expecting an increase. I don't know what to say about that. We'll see. And slightly more jobs to be added. So according to this data, straight off the bat, I would actually be, let's say, inclining towards some sort of a mixed data towards a possible good outcome. However, we'll actually see what happens. Regardless of what the outcome would be, my attempt is, I will attempt to help you guys out and give you some scenarios. So that's basically, that's exactly what I'm doing right here. Now on silver, going back to silver on the 2-hour chart, how I'm labeling this is in a complex corrective, double free, WXAB, and then 1, 2. We'll see if we have the free, because silver was a bit left behind. As you can actually see, this is a corrective piece right here from which started with an A. So it would be normal to have a C, right? We'll see if that would occur. I'm not so sure about silver, but it could deliver today a bearish drop. We'll see if that happens. However, if it does, the levels in focus would be 1585 or 16. We'll see, because these are the Fibonacci levels, right? 61.8 of WNX. Not sure. I think it could surpass it 100%. Worst case scenario, it would be 1555. So we'll see what would happen, right? Now on crude oil, for instance, this is a bit, let's say, for instance, the way I'm labeling it is as an A with a A right here with the previous rally, and then the correction actually starting. But this X unfolding in a double free, so double WXABC with an ending diagonal right here, which surpassed the top of A, of course, right? And this bearish outcome right here, it seems like it's breaking the channel, yeah, the lower base, and this view was previously posted, let's say, for instance, with this article right here, yeah, at 72.80, 72.25, and then it goes, right? So you can actually see basically the outcome of the previous analysis. Now on the euro US dollar, the way I'm seeing the euro, because everybody is interested in the euro these days, right? So I would be inclining towards a bearish outcome for a proper divergence, a proper bullish divergence to possibly occur, because as you can see, it fell a lot, right? And even if it doesn't like bounce in an impulse within an A wave, was, let's say, for instance, as a corrective would still occur in order for the market to basically continue its cycle. So the way I'm labeling it is in an impulse, obviously in this C wave minute scale, in order to complete the minor Y red. Now the way I'm labeling this piece right here is in an ending diagonal in a channel with an ABC in each piece, yeah, in each wave. So we have 1, 2, 3, 4, and then we would be looking for this, right? We'll see if that happens today. Now the reason why I'm saying this is because it seems to me like the euro is still vulnerable, because these volumes are quite sustainable, right? We don't have a bullish divergence right here. It's not showing me anything. So what I would be expecting is this type of volumes right here to give me a secondary divergence right here, but a main divergence right here, a bullish divergence, if this would be destined to rise, right? So that's basically what I would be expecting for the euro. However, if the NFP data would be bad, right, we noticed that it surpassed the channel. So this could be a first wave, then we have a 2, and if this happens, then the uptrend, at least a corrective piece, would occur, right? So it would be real, in other words. Euro could actually find its temporary bottom. Same thing on the pound dollar, right? As you guys can see, it's channeling right here in an ending diagonal with an extension in the third wave 4, and then we'll see if this happens today in order for a proper bullish divergence to occur at the end of these degrees. Dollar yen, okay. By the way, on the euro, let's say previously this view was actually posted. Let me just find it and see what it is. Yep. Okay. The actual drop on the euro was actually posted there, but also was actually posted right here as well. Okay. From the actual top. So let me just load the new bars. Okay, there we go. All right. Yeah. So as you guys can see, the downtrend was indeed, in my view, as well. Now, of course, after this major fall, we would expect a contraction at least, right? USD yen, again, same thing. This one was one step ahead, posted this bearish view as well, right? But also posted the bullish view previously, right? You guys can actually see my articles on the Orbex blog. They're right about there, right? Now, dollar Swiss. This is interesting because it's inclining towards the bearish side, to be honest with you. However, you know, the bullish view. Let me just find it. Yep, right about here. The bullish view was indeed posted back then, right? And you guys can actually see A, B, and expecting a C leg. Yeah, and then it goes the monster. Look at this rally. All right, now present times. How I'm labeling this piece is in a complex structure. We'll be expecting a bullish view before short term. Let's say, for instance, you can even tag this top, no problem, right? You can even go there before more weakness would or could occur. We'll see. This one is a bit, I would not sure what to make of it. To be honest with you, it's mostly looking bearish. This is due to the Swiss franc gaining a bit strength because of the fundamentals and what's happening, right? We have about 6 minutes left, right? I'm gonna go on the Aussie dollar, let's say quickly right here. The way I'm labeling this fall is in A and a complex structure, triple free in the B, and then the C leg. We'll see if the way this went on the upside, and I'm squeezing a complex structure right here for a possible outcome on the upside. It seems to me like Aussie could be one step ahead of everything, but however, this could be treated as a corrective piece as well. So this could go even lower. We'll see. Not basically my favorite right now, right? DAX 30. 2-hour chart as well. All charts were 2 hours until now. So the way I'm labeling this piece, let's say for instance, I know I posted this bullish view as well. Yeah. All right. On the DAX, posted previously the bullish run from 11,900 and shot up like a rocket, right? Now what I did here is on this bearish divergence on the ending diagonal at the end of the degrees, posted a bearish view. We'll see how this unfolds. The way it's unfolding so far could be an AB, see, with the say, and then AB going below the end of the start of A, no problem. It's a B wave. It's allowed to do that, and we'll see if it would give an ending diagonal before more. More weakness or not, right? If it's not, then this means that this is a 1-2 1 2 1 2 and don't want to squeeze it or jump the gun right here, but this could be a very big fall in the free or freeze. So I'm not, as I said, I don't want to jump the gun, right? I want to keep it realistic right here, but we'll see. S&P 500, this is a 4-hour chart, right? And the way I'm actually labeling this piece right here, this corrective structure in an intermediate A, and then a complex structure in this B, a double free with this W, X, and a possible Y. All right. The reason why I'm doing that is because this piece right here is clearly corrective. Yeah. So it has multiple overlaps in it. So I'm labeling it as a W. Then X right here, and seems to me like it's channeling right there. Yeah. For a squeeze on the possible squeeze on the upside. Now notice that I drew some fibs from W and X projecting 100% for a possible Y, and from basically WX AB, just AB, see 100% aligns right there. Okay, so the level is 2,825. We'll see if it even goes there. Now, what's catching my eye on the S&P 500, it's actually interesting, is because, right, we all know the uptrend, right, the bull market. Then, let's say early February started contracting. So this would be the first leg. Now, this is indeed the first leg of the entire structure as a corrective. So the way I'm seeing this is as an A, B, C, right? In order for us to have a proper correction before the bull market would actually continue. Now, the point is that this move up is a corrective, is a correction, right? This move down is a corrective of this corrective. But this is correcting this correction. So it's a correction which is correcting a corrective piece, which is also correcting a corrective piece. Has the reason, and this is the explanation for, why complex structures WXY form. Yeah, this is the simple explanation. It's a conflict of degrees, conflict of corrections. So WX, AB, and I'm projecting a possible C right here on the SPX. We'll see if that occurs. However, if the data would be, let's say, for instance, not favorable for the S&P, if this line is broken, it's in danger zone, right? It would actually be in danger zone. S&P could become very, very vulnerable, and the next stop would, if a breakout would occur right there, 2,500, something like that, 2,475 I have there, but we'll actually see. And how I determined that level was simply with these projections for the 100% right here. Okay, we'll see. Now, let's go on the NFP, on the economic calendar right here, and actually see the results. Now, according to how the results will according to the actual results, we will continue the analysis and we will pick the best, the next best interpretation for us to actually have an outcome. Yeah. So we're gonna wait for the data to actually be released. I hope you found the analysis so far useful, and it will make you, it will actually help you with your trading decisions. However, please keep in mind that I'm only doing this to help you guys out, not to tell you where the market could or would go, right? So let's see. We have the unemployment rate decreasing, which should be excellent for the US dollar. We have more jobs added. We have the participation rates much, much better. And an increase in the average hourly earnings. So full, straight off the bat, dollar bull, right? Look at this. Now, it broke through this bull flag, possible bull flag that I put there, right? It would be interesting. The impact on gold would be very interesting, because usually the impact is very big on gold, on the NFP, and on the FOMC, Federal Reserve. So right now, I can actually say that the wave count on gold would need a review. So I could be sticking with an AB, and that scenario in a 1, 2, 3, 4, 5, right? So I would be looking for more downside. Now, I'm actually glad this actually occurred. This scenario occurred, and I'm gonna show you basically why. Because previously, let's say for instance, yesterday, right, on the 31st, I have a position here open for the sell in gold, right? And this is favorable for me. Obviously, I put it at break even, just like any good trader would do once in the green, right? So what I'm going to do is I'm just going to leave it there. I have my TP around 1280, right? At the nearest low, we'll see that occurs. It can even go lower. However, if you would stick until the end of the webinar, what I'm going to do at the end of this webinar, I'm going to go on the larger time frames such as daily, weekly, and give you guys the bigger picture and my view on when the market could be going on the long medium term, right? This is just a short term thing. So I'm just gonna leave this one open right here, get rid of it. Yeah, so let me just put it there. All right, now moving on to silver. Silver should have a reaction. However, actually the market could be like digesting this this event right now, so the move may not really occur in the first moments or minutes, or the market could be waiting a few, let's say for instance 15 minutes, 30 minutes, even hours, right? Or even until the US Open. We'll see, right? But for now, one thing we know for sure is we have green light, right, for the dollar so far. This is how it looks like, right? And the scenarios will actually, I mean, the main scenarios, I mean, this one, yeah, for the dollar index on the 2-hour chart is looking promising so far, right? So the breakout may not really occur, right? So we'll actually see. Dollar seems to me like it's dangerously heading higher, I would say, because if this would actually start a bullish run, yeah, it would end minuet 5 in an expanding ending diagonal, but it would also end a larger degree, which if I'm going back on the daily chart on the dollar, even if this is an A, or let's say for instance, if this is a 1, 2, and then this would be the 3, still there, we would be returning for a 4 in the wave 4 of a previous degree, right? Sorry, which is this one, right? Because a wave 4 would typically retrace in the price action territory of a previous 4 of a lesser degree. And this, if this would be a fourth wave, this would be the vibration level, the zone, the 161.8 of this on this, the 38.2 of that fall. There is for market participants, this is a playground, right? This is basically a point of interest, a vibration level where buy-sell orders are actually placed, executed, etc. Right? Moving on. Seems to me like the impact on crude oil on WTI. By the way, this is a 4-hour chart, right? The impact is quite. Say we might have more weakness for crude oil, and as I mentioned before, this is actually helpful because for me, because my view was indeed on the right path, 72.25 possible sell-off. Right now, we will see if this indeed continues. Right now, I'm gonna take my time let's say for instance, in the meantime, just wanna watch out for some questions right here. Are you explaining about Elliott Wave? Yes, that's exactly what I'm doing. Don't have time to actually explain, educate, let's say. However, there is content available. I'm gonna go into the contents. Let's say ebooks, explanations, video presentations, webinars, advanced sessions, macro perspective, quarterly reports, etc. Have some content for all of you coming up. All right, Orbex is going to sort you out. But the point is, I'm going to explain each and every content in particular. okay, later on. Great analysis, thanks. You're very welcome, my pleasure. Hope it helped, and I wish you many pips ahead. How many pips did the NFP move the market? I don't know. Enough. Euro USD, right? Seems a bit bearish, right? As I think, I mean, the move is not big. That's for sure, right? But as I said, the market could be waiting right now. We're only 6 minutes away from the actual release of data, so this could, let's say, for instance, the sell-off could actually start, right? We'll see what the market would do. There's always surprises. Let's say, for instance, if the market participants will decide to disregard what happened, right? They can just, I mean, Euro can just shoot, but according to this analysis, I mean, according to the fundamentals and the technicals, they could synchronize for a continuation of for the bull run for the dollar, right? So moving on, pound dollar, not so much of a reaction, same thing as the euro. Dollar yen, right? Seems to me like it has a bit of a reaction. It's hitting some fibs, let's say for instance the 50% of this entire drop, right? So it's only normal for this to react about there. However, let's say for instance it could go like this, or you can even, this is a B wave, so it even has the right to tag the top, right? Not sure if it would or could do that. However, there's an interesting pattern, possible pattern right here, because dollar yen, according to, because of what's happening in the market and the uncertainty and fundamental events, possible trade wars, this, that, all these news, right? Yen is a safe haven asset, so that's hence the reason why this actually started falling before yen got stronger, right? So this could continue, in other words, on a head and shoulders pattern for more weakness, and we'll see what happens here at this vibration level, because as you can see, multiple tops and bottoms are actually located right there. So we're gonna leave it as it is, right? As far as I know, I could be on the right path right here. Dollar Swiss, as I said, not one of my favorites, but the way it's looking, it could shoot a 5-wave sequence on the upside. We'll see, anything can happen. AUD struggling right there. Seems to me like it's posing some support, right? And yeah, no major moves on the indices, but I'm curious about the S&P, right? No major move on that. I think the market would be waiting a bit, right? So until then, I'm sorry. Until then, I'm just gonna answer some questions, right? So go ahead if you have any questions. I will be more than glad to answer your questions. So just type in the question box, please. Is it possible to predict the NFP through Elliott Wave indicator? Depends on how you use it. No indicator will predict a fundamental event. Not unless, I mean, this is the, let's say for instance, the Elliott Wave indicator, it's called bull riding. It's a modified one, right? However, I don't use it to predict anything. I just use it for divergences and just to confirm my waves. That's it. Mostly, I'm using price action and I'm using labels, degrees, structures, patterns, and divergences and other things. So you can never be, let's say for instance, when you're analyzing a fundamental event such as this one, you can never be right all the time, right? So to answer your question, simply put, there's no such thing as as an indicator that will predict something. It doesn't make sense. The market will move according to its destined direction, and the Elliott wave provides me with a state of mind, let's say, preparing me for possible outcomes, thus preparing me also psychologically. So exactly what I did today. According to this, let's say, for instance, breakout, this would actually mean that the dollar index could have topped right there. This is not in the menu yet, right? Unless it falls. So if it breaks, I know basically what to look for. If it doesn't, right? If it doesn't break out and it forms a bull run, then I would be looking for a bearish divergence because I know this pattern could be indeed valid, right? The expanding ending diagonal. So even if it's going to be a corrective structure in free waves, would still be with a, let's say, right, with a possible bearish head and shoulders formation, right? So that would be basically the case. However, if this move right here, let's say for instance, let's pretend that the market could go up, right, in 5-way sequence, not the best, right? Okay, like this, and then it would fall in 5-wave sequence. If this happens, then this would be a bearish sign, right? Because this would mean that the trend could reverse and have more continuation of a larger degree, yeah, for an A wave of a minor scale. So, more questions. I'm sorry, I will not analyze any other pairs except what you actually see, what I went through today. Okay. If, however, you would like an analysis or something on a specific asset, I'm at Orbex. Give me a call. My extension is 333, right? Or ask your account manager to set up an appointment, a session, or something like that. Next. Where to start wave counting in a chart? Well, you have to basically start with the larger picture, obviously, so that you can actually know your position in the overall the overall position of the market. So you can start, let's say for instance, Elliott Wave analysis can be used on any time frame, right? But just know that the less, the lower the time frame, the more you tend to get caught up in some overlapping and unprecise decisions. Hence the reason why I decided to stay on the 2-hour chart, let's say, as the base. I do go, of course, on the lower time frames, but that's just only when I'm trying to confirm some move or swing. How to install Elliott Wave and MT4 platform? Well, you can just find it as an indicator, download it, and set it up. You can ask support for that. That's no problem. Okay. What is a possible fake out to the upside because the DXY is looking bearish now? Major pairs are strengthening against the US dollar. Yes, that is indeed correct, Ashlyn. You might be right. Yes, I'm seeing the same thing. To be honest with you, the dollar could indeed get weaker, right? However, psychologically speaking, what's happening right here is basically the dollar has had indeed this bull run, right? Now notice that the way it's actually unfolding is with overlaps, doesn't have that typical impulse sequence, aggressive moves, right? So in other words, this move is not really being sustained with volumes or with price action moves. Hence the reason why this, it's looking like the dollar is basically the dollar bulls could be running out of steam. Hence the reason why a bearish divergence around there could start a downtrend, right? I hope that answered your question. On short-term, USD looks strong. However, the interest rate decision could be foggy with the next couple of weeks. Furthermore, on the long-term, USD could get weaker. Yes, you're a good trader, Tarek, I believe. I'm actually seeing a bit of the same thing. I'm not basically gonna go into it, but to be honest with you, free rate hikes this year are already priced in, right? One actually occurred. Second one could be around the corner this month, right? So we would have this event. However, keep in mind that it's actually priced in. And remember what happened on December 12, 2017, when they actually hiked, right? Market went down, dollar went down, right? Because it was priced in. And with everything that's happening with the yield curve and yields story and inflation and everything, hikes are not really helping, right, on the bigger picture, on the economic scale. So inflation could become a problem. And if you guys would stick until the end of the webinar, I will go on the macro perspective. Just let's say, for instance, as as an explanation, this is what I would explain. And multiple other charts. This is the Dow Jones, a 100-year period. Yeah, this is the full wave count on Dow Jones and the cycles, basically from 1914 until 2018. So at the end of the webinar, whoever stays will be in for a treat, because I'm going to explain what I'm actually saying right here. Okay. Now, let's continue. We don't have a move, right? So there's actually not much movement, but this is precisely what happened during the previous previous NFP release. Excuse me. So the movement could take some time to actually take place. The market could be digesting the results. Will you be able to do a webinar on the June interest rates? Possibly. Why not? Of course. Would look into it. Would be glad to set it up. Gold hit the monthly bullish trend line and reversed. Do you think the trend line could be broken today? You mean on the upside? The fundamentals would not really sustain such a move, right? I already said, because gold, let's say for instance, the market is actually kind of going against, right now, but this could be a scenario. My previous view was indeed a bullish view somewhere around here. Let me just find it. Yeah, it was somewhere around here. Okay, it's this one. Okay, there we go. So I was keeping my eye previously on 1285, right, on this bullish run in this green box right here. However, you can actually see that gold could be vulnerable. So the current wave count might not be the right one. Okay. Especially if this move goes below this point, right? Let's say a few more, let's say below 1287. It would invalidate this wave count, because wave 2 must not go beyond the start of wave 1. So this is the first wave, black minuet, sorry, and this corrective piece would need a bullish run right now, because if that doesn't happen, and if it goes lower, I would explain why, then it could basically test this trend line once more before the possible rise. So if you're bullish on gold, fundamentals don't really help gold right now. Hope this helps. Very interested in the macro perspective. Excellent. Okay, downside. Yes. Okay, so we're on the same page. You're welcome, Veronica. Now, moving on, what I wanted to explain, I'm going to stop with the questions for now. Keep it coming, right, if you wish. I'm just going to explain some content, some upcoming content, which Orbex is working on for you guys, right? So the first thing is, let's say, for instance, this is an example. This webinar is obviously, these webinars are live examples on the actual charts happening live in front of you on the Elliott Wave analysis presented by yours truly, Richard, right? Now, as a base, as a foundation for anybody which, who would like to learn, right? There will be an ebook, a full explanation and guideline on Elliott wave analysis done by yours truly, right? So you would be able to download an ebook, right, a written one, with guidelines, structures, patterns, explanations, basically kind of everything you need to know about Elliott wave analysis. However, of course, the market is moving. You have to keep your eyes open and obviously think outside the box. But this is where the next contents will come in play, right? Besides the written ebook, there will also be a video presentation, a video course, let's say intermediate wise, um, and also besides the NFP webinar. Uh, what I'm going to do is I'm going to present weekly sessions which would act as intraday updates and projections, possible scenarios, etc. Just exactly what we did today, right? But on a weekly basis to act as as an update, as a base for our traders. So you will be able to attend every week for those webinars. Besides those type of sessions, so if you're looking for education, that you're going to have the ebook written and the video version of the course, right? If you're looking for updates, then the weekly webinars will be there. Next, also I will be hosting some advanced sessions, which will be straight to the point. No, explanation of course, but more like advanced level for our live traders, right? Live account holders, etc. Everything is for the traders, but this one's in particular would require a live account, right? So this advanced sessions would be based on patterns, levels, the big pictures, etc. What could happen, what would be expected, etc. Right? And a full explanation, let's say, on the macro perspective. What I'm gonna do after the at the end of this webinar, I'm going to go on some on a macro scale and give you guys my let's say my view on the bigger picture and some, let's say, daily, weekly charts, which would be quite interesting. So if you would stay until the end, you're in for a treat. And let's say the last content which would come and will be the quarterly report and possible projections for multiple assets, such as, let's say, for instance, S&P 500 or Dow Jones, metals, gold, most likely, energy, crude oil, and some majors, let's say, for instance, euro dollar or pound dollar or USD yen, etc. Right? So that will these contents will actually be available, right? So stick around. As I said, you're gonna be in for a treat. Now, I'm gonna continue with the questions. I'm gonna switch to the macro perspective, right? Okay. Let me just take a look at the market right here. Yeah, dollar could be pushing on the upside. So let me just continue with this, right? So as I said, what I have in front of me is the Dow Jones chart from 1914 until 2018. So let's say, for instance, let me actually explain to you what's happening right here. Okay, let me just make this a little bit bigger. As you can see, the doesn't work. Okay, just gonna keep it like this. Right here I have the labels. Yeah, so you can actually see. So I mean, these are the degrees, impulsive and correctives, right? So for instance, obviously this move comes from down, from zero, right? And this peak is the right before the Great Depression, 1930s, right? Started dropping like a rock. And this precise move is indeed a zigzag and ABC, right? Because I zoomed into it on the previous chart. So I labeled it as Grand Super Cycle Wave 2. So in other words, the peak, first wave, then the corrective 2, and then the extension in the free in super cycles 1, 2, 3, 4, and then the fifth leg on the fifth wave on the upside super cycle purple, thus possibly ending grand super cycle 3 red. So the way I'm labeling this is as a 1, of course, zigzag in 2, 1, 2, extension in 3, fourth wave, fifth wave with an ending diagonal, thus completing super cycle 3 purple. Now this correction is complex, so I'm labeling it as a W, X, and a triangle in Y. It's called a double free, okay? And it's ended right here, for instance. Now, again, the market continues 1, 2, somewhere around here, this 1970s crash, right? And then 1, 2, 3, and 1987, the Black Monday, right? Boom, fall. I label this as a wave 4. Notice that waves, wave 4s tend to, when the market is rallying, wave 4s have a bigger impact, right? And then followed by an exaggerated extension, 1, 2, extension within the extension. So in this case, the third wave extension within the third wave extension, which is quite normal, right? This is what Elliott Wave is based on. Then corrective 4 and then 5. This is the dot-com bubble, 2000s, right? The market started contracting, then went up for once more, and then went down. The way I'm labeling this entire corrective piece is in an expanded flat as a type of structure, yeah? So went down, yeah, from the 2000s, went down, and then went up. This is the 2008 recession, top, went down on the C leg. So you have actually Y leg, WXY. Now, from 2009, started rising again. And I'm labeling it as a 1, 2, 3, 4, and an extension in wave 5, right? Now, this is the Dow Jones. Now, what I'm going to do right now is I'm just going to minimize it, just pull up a few more charts, and just going to show you a couple of things. Now, this is the this is the VIX, the volatility index, the CBOE. Now, for those of you who don't know, this is a volatility, obviously, index, right? And what it measures is fear. It's also called the fear and greed indicator, right? Notice that, let's say, for instance, I have here dot-com sentiment in 2008 recession. Notice the peaks, right? So in other words, when it peaks, it's not good. Last time it peaked is right here in early February when the market fell, right? The indices fell. And I was able to actually spot this. I have some other views to point out from the moment it actually started falling. So I was able to see this, in other words, right? So this spike. Now what it's doing right here, this is the weekly chart on the VIX, right? No point of on staying on it on a lower time frame. So what I would actually see, notice that this channel right here, yeah, has been touched and now it's rising. So again, volatility could be returning. Yeah. Let me just check the questions. All right, all good. If you guys have questions, just write them in the chat box, please. All right, so in other words, this could happen. If that happens, then it will coincide with, let's say for instance, S&P daily chart, right? With a C leg. I'm gonna zoom in that piece. Anyway, I was able to spot this top in a previous video that I did, but obviously this view was indeed, let's say for instance, posted previously. Yeah, so I'm just loading the new bars right there. And pretty good, right? Exactly 2,800. So within this piece of the S&P, this is a macro, I mean, let's say for instance, a monthly scale on this piece. So the way I'm labeling it is as a 1, 2, 3, 4, and then 1, 2, 3. This would be the 4. So if I zoom in, if I were to zoom into this piece, yeah, I would, this correction, in my personal opinion, would need a basically a complete set, right? And this is indeed this, let's say for instance on the 4-hour chart, the way I'm seeing things is this, the S&P 500 tagging this top in order for the structure to become clearer, yeah, in a free wave move. Doesn't matter how it goes, needs a free wave move, because this is impulsive, this is corrective, this is corrective, this is corrective. So in other words, the S&P 500, in my personal opinion, would need a bullish run towards 2,825. Let's say, for instance, anything higher than 2,800 would do, right? Before the bearish leg would even occur. I tried to make sense of it. Let's say, for instance, if this would be some sort of triangle, right? So in other words, this would be A, B, and then this could start. But the problem is the way it went down. It's not a 1, 2, 1, 2 overlapping in corrective look, in other words. So personally, still looking up before making a bearish decision or something like that. Before I would be looking at S&P with bearish eyes. Now, let me just continue there, right? So we went on the S&P. I'm not gonna go in depth. I'm gonna save everything for the macro perspective webinar, live sessions, etc. Yeah. So that's what I will do. So okay. Now, crude oil. This is the daily chart. But firstly, let me go on the weekly chart on crude oil. The way I'm labeling this is from 2008 recession, when it started falling, went up in a, I'm labeling this as a triangle in the cycle wave B black, and then 5-wave sequence in the C. So we have A, B, C. So far so good. The entire piece, the structure could be complete, right? Now the way it went up in a corrective piece, which tells me that the structure is complex. A, B right here in a complex running flat, then C, limited C, thus W. W, X, Y, X, and then A. And you guys know my view. I'm actually seeing a possible contraction in crude oil, something like this, before it even goes up, right? So the way this could go on the daily chart, I switched. The way that it can either go in a running flat, which, let's say for instance, because this point hit a new high, right? And this type of corrective piece, because this is indeed corrective, yeah. Let me just give you an example. It's like this, yeah. Went higher than this piece, and it created a running flat. That's basically the pattern that could occur. However, this can become an expanded flat, so it can go lower than this point, yeah, because it's at the top. So if it is an expanded flat, it can go even lower before it even goes. So there's no way of knowing, yeah. Right now, we'll actually see on an intraday base how far it could go and how weak it could be. Now, next, Gold. Weekly chart. The way I'm labeling this is as a AB, complex structure right there, and then ending diagonal in the C, right? For a super cycle A, and this is a wave count, which involves a possible triangle right here, yeah, with an A and then a triangle in this B, and this would imply, of course, a C wave on the upside, right? So I'm still looking up on gold, to be honest with you. However, if I go on the daily chart, you'll actually notice that the wave count is different. So I'm trying to alternate my way of thinking. Now, the point is that the way I'm labeling it is as a W, X, and then the same thing which I explained on the S&P, the conflict of degrees. The reason why complex structures actually form. They have a conflict of between corrections. So a correction is correcting a previous correct, right? So that's the reason, the simple explanation, or my explanation on why these complicated structures occur. That's why they're labeled with W's and not with ABCs. Yeah. So we have the main move up, another move down. This could be considered as a main move down as well, because the structure could be like this. Yeah, in a structure like this. So this would be, let's say, one move upwards. Yeah, corrective piece in the middle, and then the other move upwards. Yeah. Now, what it can do is, let's say, for instance, in that type of scenario, it would need to break and go lower than this point, because these tops did not go higher than that point. So automatically, this could, I mean, if it breaks, this would be very bearish, by the way, and gold can actually hit this lows, right? So I'm being patient right now. I'm still, according to this wave count, would be still looking for a possible bullish outcome. Even if it goes like this and it shoots immediately, has the right to do that. Notice basically this trend lines. Yeah, let me just give you an example right here. Hit this trend line, broke out, reaction. Hit this trend line, reacted on it, broke it, reaction, right? Hit the trend line, went above again. I don't know. But what I do know is that the volumes are increasing right here. So if a new low would occur, this could be an ending diagonal, let's say. Yeah, for a possible bullish outcome. However, if the move would be sustained, then it could be could be having difficulties, right? On the euro, let's say for instance on the weekly scale, the way I'm labeling it is as in a W and then running flat in X, A, B, C, right? And then this corrective piece, which again, so my view is W, X, Y, right? Completing a cycle wave W orange. The fall is labeled as a W, and then I would be expecting corrective X at least, would see the reaction around there, if it even does that, or it can be limited on a bigger head and shoulders formation right here in the free wave move, and then more weakness. We'll actually see. Now, going on the daily chart, the way I'm labeling the euro is in an AB and then the C leg, right? And the way it went down is basically complex structure, WX, and I'm labeling it as an AB and then the C leg. Notice that this is approaching a 50% Fibonacci on the entire rise, on the entire leg of W, right? We had a reaction on the pivot around 1.15, yeah, around, not there yet, but around, right? 261.8 of WNX in a exaggerated extension scenario. So a reaction could actually unfold there. Let me just move this. This was what I would be looking for, a possible bullish divergence. So we'll see how if euro even reacts there. Now on the dollar weekly chart, right? This is the most interesting thing. This is the 2008 reaction on the dollar. It was bullish. Then it corrected. So the way I'm labeling it is as a W, X, Y. And then this is a very complicated wave count, by the way, right? So the super cycle ended here. Then we have WX. The way I'm labeling, the reason why I'm labeling it as an X is because it's formed out of free swings. Doesn't have a 5-wave sequence, clean 5-wave sequence, not even an ending diagonal. So yeah, now continuation. You guys know it because I went on the daily time frame right there. So AB 1, 2, 3, 4, 5. So on the weekly scale and the larger picture, this is what I would be going into in depth during the webinars. A, B, C, I'm completing A, would be expecting a 3-wave move right here followed by a 5-wave. This is the dangerous one because the market could have that contraction on, let's say, everything that I went through so far. In other words, this thing right here. If this thing happens, then the market could be posed for more weakness when it comes to, I mean, uncertainty, right? Volatility could be coming back. So, yeah. Now that's basically. I want to keep it like this for now. If you do want, I mean, a full explanation and say, for instance, on the macro perspective, just you're free to join the upcoming macro webinar, macro perspective, the big picture, right? So already went until there. Now let's return to our charts, right? It's only normal for a dollar to, I mean, for a correction to actually occur. Now, just gonna leave you guys with something before we go. We already let's say 13 minutes over the projected hour. So if the dollar would break this, it would be a bearish sign, obviously, and traders would be, of course, looking for some sort of a bear flag or a free wave correction right here. I mean, let me make it like this, okay? Free waves moves. In other words, if it breaks, it would, of course, retest, try to re-enter that broken trend line before more weakness. So these are signs that traders usually look for. However, the news are actually in favor of the US dollar right now. So it would make sense for this correction to be temporary before the next bullish move. The preferred scenario would be a bullish one because according to this wave count, it will end 1, 2, 3, 4, 5, as I said, in an expanding ending diagonal scenario, of course, right? Whichever scenario would occur, all I know is that personally I would be more prepared, and I hope you will be as well for the next trading week, right? And according to these views, so we'll basically see no major reaction, let's say, like drastic change or something like that so far, but yeah. So until now we kind of went over everything. If you guys have more questions, just go ahead, write them in the chat box, right? If not, this webinar would be ending very, very soon, right? Okay, before before I do that, we'll actually let you guys know that you will find me on the Orbex blog right here. Yeah, and let's say, for instance, let me give you guys some examples. Yeah, on the 13th of April 2018, posted an article, is the USD getting stronger? This is the article when I let's say, for instance, let me go on the daily chart on the on the XI, projecting a possible rise in the dollar right there on the daily structure. Yeah, and on the 2-hour chart, it was this ABC. You guys actually saw it when I clicked the play buttons, right? And here, I'm speaking about basically the possibility of the euro having weakness, starting the possible downtrend, Pound dollar the same. USD yen starting the bull run. USD Swiss the same. NZD USD legendary fall right here. Legendary fall on the NZD USD. Posted right there. Gold and silver falling more, and obviously crude oil rising and then possibly falling at 72.25. So this view was actually posted right there and then, right? Now, let's say to get closer, yeah, this is the article posted on May 17th, one of my most recent articles in which I'm actually speaking about this dollar index. Let's say, for instance, bearish, starting to look bearish, of course, yeah. And obviously all these views right here. So let me just give you an example. Here I'm talking about the dollar moving higher before possibly getting the hammer, right? Then XAU USD reaction about 1285 and all that. XAG USD more downside before the possible rise. WTI 72.25 reaction for the downside possible. It happened. Euro USD more downside before a possible reaction. Pound dollar same. USD yen rise ending diagonal right here and a possible drop starting, which occurred. Dollar Swiss didn't go like that. It went actually on the downside, but the main view was, of course, bearish. Now here's the start of the day, right? The DAX reaction around 13150, yeah, and it did have the reaction. You guys can actually see it right here live. So yeah. Thank you, Richard, for your insights. Your pleasure. Sorry, my pleasure. You're welcome. Okay, now let's just for now I think it's enough. I think you get the picture right here. If you do have any other questions, you are more than welcome to write the support, or if you would like to provide your feedback in regards to this webinar, your feedback would be much appreciated. I'm sure that you'll receive a confirmation email for this webinar. Feel free to provide your feedback. As I said, it would be much appreciated. That's about it for today for this event. Once again, this was Richard, and as I like to say to all my traders, until next time, stay in the green and many pips ahead. Bye for now.